Joined now by Jacobus Brink from Sharenet to discuss the markets. Jacobus, how did the markets close? I've been watching the all share for most of today. It seems to be in the green. What's your take on this Wednesday?
Yeah, hi, thanks so much for having me again. Always appreciate being on the show. Yeah, it's been, we ended pretty much in the green. Didn't expect too much, seeing that we've had a Fed decision this evening. But there was, if you look under the hood, there was quite a bit of activity going on in a few names. I think we'll probably get into that going on. But yeah, I think market's pretty much on hold to see what the Fed does this evening.
Yeah. What is your take? I mean, we're looking at the Fed now. All expectations are that they'll cut their rate by 25 basis points. Are we in for any surprises?
Yeah, I think, if you just look at what the market's pricing, it's pretty much pricing in a 25 basis point cut. But I think, there's going to be a lot of other variables that the market is going to focus on. As always, there's going to be a lot of attention in the post-decision interview with Chairman Jerome Powell. And, I think this thing will definitely be in the dot plot. Powell is probably going to signal that the easy money is over for now. I think they're sitting in a difficult spot. Obviously, the market, if you look at the labor market, it is starting to weaken. We are seeing some cracks there. And, with their dual mandate, they're obviously focused on inflation and the labor market. But inflation is actually remaining surprisingly sticky, So they're sitting in a very difficult spot here. I think the other thing that's making it interesting as well is that there seems to be growing dissent within the committee itself. Some members are arguing that unemployment is steady still, so there's no need to rush further cuts. But we have got quite a few dissenting votes at the moment. And it's quite interesting just to look historically, these typically there were not that many dissenting members going into any decision. Yeah. So this is quite an interesting one. I think the added, on top of that, is the fact that, Donald Trump has been making noises that he might actually replace Jerome Powell. So all of this is making this to be a very, very interesting cut. I think we might still even just see a sell the news type of thing. So whether they cut, whether they're not that hawkish, whatever, the market will probably still sell off a little bit just because of that, all of that uncertainty around.
Yeah, oh, well, let's wait and see what happens and not speculate. Something else I did notice today was Mr. Price, and down at one point down 13%. I know they've got this acquisition that they announced today. I'm sure it's got everything to do with that. What's your take?
Yeah, that was quite a big one. The last time I checked, it was down more than 13%. I was also on the call that management had at 2 o'clock. To me, I think this could possibly be a company-defining pivot. Mr. Price sort of feels like they are effectively exporting their value business model to Europe. But the execution risk, I think, in this one is massive. And I just think, history has shown that, other guys have tried it before, Woolies, et cetera, and it's always a difficult one. So in this case, just for the viewers that aren't aware, they are acquiring the NKD group for roughly, I think it's about 9.7 odd billion rand. So it's a big check, it's not just a small little bolt-on business we're having there. But they instantly do add about, in excess of, I think, about 2,000 stores across 7 countries. So it is sort of nice diversification. And if you just sort of look at the bull case, NKD is a hard discount retailer. They sell private label apparel in small format stores in smaller towns. So they focus more on the rural market. And this, I think, is sort of exactly into Mr. Price's playbook. Low fashion risk, high volumes, focus on value. They're not trying to be a Zara or trying to be the Mr. Price in Germany even. They're purely, and management also indicated that they won't be traveling to Germany to try and run the company from there. They're going to be leaving them to do as they please at the moment. Yeah. The worry, however, is, as I mentioned earlier, South African retail's track record offshore is very poor. So that already,
you've got to watch it,
the market is a bit concerned about that. Yeah. I think just that running a 5,000 store empire across 2 continents with different currencies, labor laws, it's a significant leap.
Yeah.
So, I think on
Willie's
paper,
learned. Yeah.
Willie's learned, yes, exactly.
Yeah, Willie's learned.
So I think on paper, the DNA matches perfectly. But in practice, most SA retailers have often found Europe to be a graveyard. And the market seems to have sort of fundamentally shifted their view on Mr. Price. So it's going to be a very, very interesting one
Well, let's watch the space. They are confident. Let's watch the space. Right, Anglo and Tech equals Anglo-Teck. I find this quite fascinating. They're going to be massive.
Yeah, this wasn't just a pass. I think it was a landslide. 99% of Tech Class A and 89 or something percent of Class B shareholders all voted yes. Anglo shareholders similarly. So this basically merges 2 Tier 1 portfolios to create, as you mentioned, the Anglo-Teck. The combined entity will have 70% exposure to copper, positioning it as perhaps the single most significant large cap play on the new energy transition globally. The shareholder fight's obviously over now, so now the regulatory fight begins. And there's Canada's Investment Canada Act will be they'll be sending it there for the final review. This is, I think, going to be quite a hurdle to clear, so the market hasn't got too ahead of itself just yet. But a very, very big one indeed.
Yeah, no, interesting stuff. It really is. And then something else that caught our eyes, Libstar. And they've got this mushroom thing that they offloaded, but it's been a bit risky, a little bit risky.
Yeah, well, the market seems to like it. It was up double digits, I think, at one stage. It ended up about excess of 5%. So as you mentioned, they're selling the fresh mushroom operation, the farming side, while they are keeping the Denny's brand via the license they have. And they do expect to take about, I think, a 50 million rand loss on the sale. But, I think from a bigger picture, this continues the trend of exiting non-core capital-heavy assets. We've also seen it on our household and personal care divisions that they're also looking to sell. The group revenue is up 6.7% year to date. So by cutting as they call it, the deadwood, I think they are turning Libstar into a much purer, higher margin packaged food business, which is exactly what shareholders have been asking. So the market seems to like it, and we think it's a good one.
Let it keep going. Right. Speaking of good things, what is your stock pick?
So my stock pick for today is Discovery. Discovery, I think over the past number of years, they've been on the trajectory of trying to show that this investment case could actually work. But I think now, their single biggest drag on earnings has now become the contributor. The Discovery Bank turned profitable in the second half of the year. It's growing client base around 30%, successfully pivoted from, as I mentioned, cash burner to actual cash generator. On the global side, Vitality Global is also firing, doing very well. I think just from a market structure point of view, the stock recently hit the high near 232-ish, and it's pulled back to around the 220, 225 level. It's back retesting that breakout level, and I think this is another opportunity for investors to get in.
Yeah, it's solid. Jacobus, thank you so much. Good to chat to you on the close tonight. Thank you so much. And that was Jacobus Brink from Sharenet.